It's been a minute, but I'm going to show you guys what I've been up to in my game winning portfolio 6. Let's get into it. Welcome to Piece of the Pie with Ty. I'm Ty, and I appreciate you guys coming to check my channel out. If you've been here before, I appreciate you coming back, and make sure you hit that like button if you like any of the content in this video. And if you're new to the channel, please subscribe and come back and see me. My channel is about making sure everyone is aware of the different avenues out here to get a piece of the pie. I also like to make sure that people know that investing is pretty simple, and I like to show you guys what's possible with investing so you too can start a small account and grow it if you stay consistent. And with that being said, let's go to the computer. Alright guys, so now I'm on Dividend Watch. If you don't know what Dividend Watch is, make sure you check Dividend Watch out. Dividend Watch is a stock screener, a portfolio tracker, a dividend tracker, all of that in one. It gives you investing ideas, and again, you can track your dividends, estimate your monthly income with your dividends, and diversify your portfolio with Dividend Watch. I use Dividend Watch myself. As you guys can see, I'm currently active, and Dividend Watch costs $64 a year. Or you can use its free version, but you only can add up to 10 holdings. So make sure you check Dividend Watch out. And if you do decide to go with the premium membership, make sure you use the promo code TY15 to get your 15% off of Dividend Watch. I didn't get that when I signed up, but you guys can get that 15% off just because you rock with me. Just make sure you use the promo code TY15 and you get your 15% off. Alright, and this is my portfolio on Dividend Watch. I'm getting away from using Robinhood to show my game winning portfolio because I don't want to show my actual broker anymore. So I loaded everything into Dividend Watch's portfolio tracker. And another reason is I like all the information that's on Dividend Watch's portfolio tracker. We can see our portfolio's dividend yield, yield on cost, income so far this year, your annual dividend income. That's really important to me. I'm almost at 300 for my annual dividend income, portfolio value, and your total growth. It's notable that you will have to add your own transactions to your portfolio tracker so it can be accurate. And of course, if you want to see what a portfolio would look like, you can just add different holdings just to give you an idea on what a solid portfolio would look like. And Dividend Watch has been upgrading their site. At first, they didn't have this chart right here, and this chart is pretty dope. You can go and see exactly what you were holding on each day. Alright, it goes back to the day. You click on the day, you can see all the companies that you were holding when you picked up certain companies. So if you add the transactions correctly, which is really important, making sure you add your transactions correctly, because if you don't, it's going to throw these numbers all the way off. Alright, so you actually got to do some work with Dividend Watch and monitoring your portfolio, but it's definitely worth it. And that's a pretty useful feature that they added with the chart, so you can see when you picked up companies, when you went hard. As you guys can see, my portfolio, I was slowly investing, and then I went hard in the paint. I felt like I had a solid hold on what was going on in the stock market, and I invested heavy, and then I just kept going up. And another thing that's notable is that this return rate sometimes goes down because I constantly add to my positions. I'm dollar cost averaging into a lot of my positions. Another thing that Dividend Watch did add was on the diversification tab. Now you have this nice pie chart. I showed you guys what it looked like on the phone, but the phone doesn't give the site justice. Alright, you can see a lot more on the website and web browser. See the sectors which you're heavy in. As you see, I'm heavy in tech, consumer services, and this uncategorized that is my ETFs. And then you can see your growth. Do you have more low yield, high growth? Which I do. I have more low yield, high growth stocks. And those are companies like Apple, Microsoft. They're high growth, but they don't have the best dividend payout. And then I got 20% in companies that don't pay a dividend at all. So those are all factors when it comes to your dividend yield rate. But my rate is a 2.26, but I want to get my rate up to about a 3% yield, and you guys going to see what I've been doing to do that. All right, now my holdings. I haven't added to any positions since my last game winning portfolio, but I have added 3 companies since then. And I think you guys should know which companies I added if you do watch my videos. Apple is still doing pretty good. I got a nice return on Apple. But as you guys see, the yield, dividend yield on Apple is pretty low. It's just a 0.57 on the amount of dividends you get. So my annual dividends on Apple is $4.18. Alright, and you can see how much I have in Apple. That's about $734. So now let me show you guys what it looks like when you get to a high yield. Alright, I got 25 of Acre. That's one of the companies that I added, and you guys can check the video out that I did on why I selected Acre. But Acre is a high yield dividend REIT, and this is what's unique. So I have $360 in Acre, but they give me $33.96 annually, opposed to Apple that only gives me $4.18. So that's the difference in the high yield and low yield. Apple is a great company, don't get me wrong, but if you are solely just investing in Apple for the dividends, you might get a better return if you were somewhere else, like inside a REIT. Because clearly, if I had that much in Acre, this number right here would almost double. Alright, opposed to Apple, it would just be, doubling would just be $8, and doubling right here would be 66. Alright, so I've been investing into a lot more REITs and high yield dividend companies. ADT was a free stock. AMD has been going bananas. I like AMD. My first share of AMD I bought back at like $56 right before the new Xbox and PlayStation came out, because AMD chips were in it. And I was like, man, it gotta be a great company. I know they're gonna go to 100 and they're 118. So sometimes common sense investing, man, it gets you far. You don't have to be a rocket scientist to see a good company. One other thing that I liked about AMD was they are competing with Nvidia. And if you know Nvidia, their price was ridiculous before the split. And AMD is cheap compared to that company, but it shows you what AMD's future could hold by looking at Nvidia. AYX, that's kind of been the worst growth stock I picked. I'm down negative $226 in that, and yeah, I hope it comes out of the dirt. BAM, Brookfield, I've got a nice growth off them. I get a $3.50 annual return. Cyber, that's a tech ETF. I've had nice growth off of that. I don't get that much on my dividends off of that company, but I get nice growth. Cloudera is a great pick, but Cloudera is about to go private. I guess that means it was a great pick. Cloudera is about to go private, and they're going to be paying all the shareholders of Cloudera $16 per share. As you guys can see, it's around $15.83. So everyone is just waiting to get paid out so they can get their $16. Of course, if it jumped up above $16, everybody would sell, because they're already going to pay you out if you are still holding. But that's why that price is staying right under that $16. CRISPR is doing bad. I'm negative $60 in CRISPR, my 5 shares, but CRISPR is still one that I think can go the distance, and it's a growth stock, so I don't get any type of dividends. And so is Corsair Gaming, another one that's in the dirt, but these growth stocks right here don't pay dividends, and that's why my dividend yield is low too, because I have a few companies that are growth companies that don't pay dividends, but I want growth and dividends. All right, so I'm gonna have that. Delta, I'm still holding on to my Delta. I'm up in them, and I'll be glad when Delta goes back to paying the dividends that they're supposed to. Delta and Southwest, you see down here, they both don't pay their dividends yet, but I've been holding them because they have been giving me great growth. Dividend Restaurants, I'm up in them, and I get a $10.60 annual return from Dividend Restaurants. That's not too bad. EPRT, that's my favorite REIT. I said it again, that's my favorite REIT. But yeah, I invested into them, and they were the first REIT that I picked out because they looked like they had great growth and they pay decent dividends. So they are right at that midpoint. Not crazy on the dividend yield, but the growth paid out. Alright, so I got good growth, and I get a dividend of $58.56 off EPRT. EPRT is one of my biggest dividend payers. The Fidelity Healthcare ETF, that doesn't give great dividends, but I've had decent growth off of them. And again, I'm just going through these companies because I haven't added to any of these positions. I just added Acre, and as you guys saw, I bought 25 shares of Acre since my last game winning portfolio. Again, I haven't been adding to my other positions, but I've been buying these high yield dividend companies and ETFs. Heco still has great growth. Everybody know Coke. Coke has been paying a decent dividend for a long time, and I get about $18 off of Coke, and I have good growth off Coke too. Lowe's, I get good growth. Their dividend $13. That's not bad at all. Again, Southwest, I got growth, but they haven't started back paying their dividends yet. Microsoft gives a dividend yield of 0.76, and Microsoft has great growth. They hit an all-time high since my last game winning portfolio, which is good, but Microsoft only gives me a dividend of $10.95. So Microsoft is another one of those high growth, low yield. So I don't understand when people be like, oh yeah, if I had one dividend company, I would just pick Microsoft. Man, you telling me I got $1,400 in a company and all I get is $10.95? I think you can get a better dividend company. But maybe people don't understand what they're saying when they say one company for dividends and they say Microsoft. Man, Microsoft dividend is not all of that, but it's still a dividend, and Microsoft is a great company. Nerd, I'm down in that. I'm surprised. That's my esports and gaming ETF. Dang, I'm surprised that's down. Northrop Grumman, NOC, that's my aerospace company. That's one of my biggest holdings, and I get a dividend of $30. They are low yield dividend company too, but I got decent growth, and I'm going to be adding to this position soon because I want them to stay one of my top holdings, because I think aerospace is definitely a great field, and they are veterans in that aerospace field, so I think I can rock with Northrop Grumman. Sonova is giving me great growth. They have had a nice pullback, but at one point Sonova was almost $50+, so they did have great growth, but they pulled back, but they'll be back. Omega Healthcare, they are one of the companies that I added 10 shares. They got a dividend yield of 7.69, and that's a great yield. They're one of those high yield companies that I was telling you guys about that I bought into, and I get a dividend of $26, and I only have 10 shares of them right now, but I'm gonna keep increasing that. Prospect Capital, that was one of my free stocks, but man, they got a nice dividend yield. I might start buying into them so they can add to my positions of my dividend companies, but I only get 72 cents from them. That's just off one share, but that's still good. 72 cents off one share. SDIV, Global X Super Dividend. That's one of the ETFs that I added for their high yield. And one of the reasons that I did pick them is a global ETF, and I didn't have any exposure globally. So yeah, it's a way I'm diversifying. So I went with them, and I'm going to be adding more to my position in them. I just picked them up, so they only give me a $6.80 annual dividend return. And SPHD, another one of my biggest dividend payers, I get $56.61 from SPHD, and they're a monthly paying dividend company. And SPHD, they have a decent yield, but it's not as high as SDIV. I'm going to be balancing that out a little bit, and that's going to help my whole portfolio's dividend yield. But I'm not going to put as much money into SDIV as I did SPHD. But I'm going to get it close, maybe half, maybe $700. But it's going to take some time. Y'all don't think I can throw anything in these accounts. It takes time to build these positions out. Cisco, I get a dividend return of $12.74. I've had decent growth on them. And the Motley Food Index ETF, they pay a low dividend, but something better than nothing. And I had decent growth. And then TPYG, that's the company that's going to be EV Box. Right now, I'm losing on that position. I'm doing pretty good, and I haven't had any major drops like that. So just slow and steady. And that's what happens when you pick up these dividend companies and high-paying dividend companies. Their volatility is pretty low, and you just had this steady growth. Just steady growth. All right, now we're going to go see my projected dividend growth. And this is one of the great things about Dividend Watch. You can load up your portfolio and then track how much dividend income you will have in the future. So I got reinvesting category US dollars because Dividend Watch is a global site. Additional investments, I put $400 a month because that's what I try to do. And I'm going to put it on 10 years, and you can hit calculate. So if I keep up how I'm going, in 10 years, my annual dividend income could be $2,382. As you guys saw right now, is almost $300. But if I continue investing, I can get $2,382 in 10 years from a portfolio just for letting my stocks sit. My portfolio growth would be great in 10 years because it's more growth than dividend income. And I could be at $78,361 in 10 years. But I'm going to be trying to make my portfolio do a lot better than what's projected. Alright, that's going to take hard work, but I'm up for the challenge. And I know I didn't show you guys my cryptos, and I didn't do that because BlockFi is secure and they don't let you record its site, but I look something like this. And what's notable is the reason I went to BlockFi. The reason I went to BlockFi is because of their interest. As you guys can see, I'm earning interest just for letting my cryptocurrency sit on BlockFi. So BlockFi is in a lot of the news right now, but it's a great place to grow interest on your cryptocurrency and earn a return just for letting it sit, similar to a dividend. And I think that's why a lot of the banks hating on it for real. But I am earning interest on BlockFi too. Alright guys, that was a look at my game winning portfolio 6. And I hope that gives you some ideas on how to invest with dividends. And so you can see that dividends may be a slow ball starting, but once everything gets going, that snowball will start rolling and you'll start picking up the dividend. And make sure you check out Dividend Watch. It's a great platform to track your portfolio. And BlockFi, if they stay out of trouble, is a great way to build interest on what you already hold it. I think that's why, again, the banks and everybody are after them. But anyway, that's a look at my game winning portfolio. I appreciate y'all checking me out. If you like any of the content, make sure you hit the like button, subscribe to the channel, and come back and see me. I got plenty more to talk about. Thanks.